My name is Gareth Soloway, and I was a losing trader until I mastered technical analysis. Logic and charts beat hype and narratives every time. Now I teach investors the same techniques that made me a multi-millionaire. This is my trading game plan. Hey everybody, welcome to My Trading Game Plan. I am Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. Now, as always, we're going to get into the data and the charts. First off, PPI data, Producer Price Index data came out for December today. It basically showed the same thing as we saw yesterday, maybe a little bit of an uptick in inflation, but nothing abnormal. Generally, the core numbers were slightly better. But again, I would just push back that we've seen copper all-time high, silver overnight, massive move up. We're above right now. We're near $92 per ounce on silver. These are all inflationary pressures. We talked about this quite a bit yesterday. So ultimately, we'll see if the numbers are accurate, then we should see an uptick in inflation in January. I think the market's beginning to sniff that out. So yesterday, we started the day with a rally on the back of the CPI data, and notice how the market's faded and closed negative, right? Again, everyone can see what's going on with the commodities, with expenses, and we know that even if the data is not showing it now, it likely will show it in the future. We also got bank earnings this morning. Generally, the banks are selling off again. Yesterday, JPM opened higher and sold right off and actually had a big down day. But let's get into the charts here to start the day. Taking a look, this is MicroStrategy. We'll talk about that in just a second. But first and foremost, folks, I want to go over the S&P 500. Let's take a look at the S&P right here. Here's the S&P. We are lower again this morning. It's not a huge sell-off, but again, the S&P closed yesterday around 7,000. Now, this is the S&P futures, so it's a little bit different. Right around 7,000, we're trading at around 69.73. So about a 27-point drop on the S&P 500 is expected. Flipping over to our daily chart, we continue to see the squeeze on the market tighten, right? The wedge pattern continues to tighten more and more. We're stuck in between this level. Which way does it break? Again, like I said, we can expand this out and say, okay, well, listen, let's just say we don't break for a period of time. What is the head where we have to, where markets will be forced to break? That's on February 3rd. All right, so by February 3rd or before, this market will decide which way it wants to go. An upside move, a downside move. Remember, if it breaks to the downside, it's generally going to be a much bigger move because all of the indicators, including the chart, are very, very extended to the upside. So upside, yeah, you could get a momentum little squeeze here or push through, but it probably would be short-lived. Ultimately, the breakdown is the more likely probability in the market, even though we're waiting day after day as the markets continue to get kind of tighter and tighter in this realm. Dow Jones Industrial Average yesterday down about 400 points is setting up to open down again. It's clear as day. We have this trend line and it continues to abide by it. This trend line goes back to 2023. The Russell, look at that. Yesterday it opened above. By the end of the day, it was below the trend line. Again, same thing, 2023 major trend line through the major lows here. We then broke down and it becomes technical resistance. Today, the Russell is slated to open lower. All right. And the NASDAQ, of course, doesn't really have the same sort of thing here, but it's hammering on this trend line. This is the trend line where everyone should be focused in on. The problem with this is that if it breaks or when it breaks, it's likely going to trigger a momentum flush out. And this is, by the way, the flush outs occur when there's too much leverage in the system. Think about what we see in crypto sometimes, how you have these big flushes on Bitcoin or altcoins, and there's this massive down move, almost like a mini crash. Now, in the stock market, you don't get those except, once every 20, 30 years because there's much more liquidity in the stock market. But the momentum and deleveraging events do occur. And that, I think, will occur once we break this. And that's why I think if we do break it, we see a much steeper decline. Now, granted, none of the trend lines have broken yet. So we're in kind of this wait and see mode. But we have to just continue as a technical trader to monitor what we're seeing here. All right. Let's go on here. The U.S. 10-year did not end up breaking out yesterday. It kind of closed flat to negative. Today, it's down just a little bit, but it is still a bull flag, one of the longest bull flags you'll see in terms of the 10-year yield. It still does favor an eventual breakout, and I still think, and again, bear with me on this, but it makes sense to me that when this breaks out, that could be the trigger where we see the S&P, the NASDAQ, and these other indices start breaking down. I do think there's an inverse correlation to higher rates, and we've seen this in the past, and a lower stock market overall, especially because the move up in rates could be due to continued unease about the U.S. financial system, the U.S. debt, and now the independence of the Federal Reserve, which is on everyone's radar, but markets so far are generally ignoring. All right, the 10-year yield in Japan, I continue to monitor this. We continue to uptick just a little bit today at 2.182%. This is also something that, again, is a potential leading indicator for higher U.S. 10-year yields. Now, flipping over to the bank stocks. The bank stocks, we had more reporting today. So yesterday we had JPM. We'll look at the JP Morgan chart in just a second, but I did want to go over Bank of America selling off a little bit on earnings. Wells Fargo selling off a little on earnings as well pre-market. And then Citigroup bucking the trend is up a little bit on the day. And so generally yesterday we had JP Morgan, and we could go to that chart here. Let's take a look at JPM. If we go to the daily chart, what's fascinating about this is look at where we were just a few days before earnings were announced. We were at the high end of a parallel, which again dictates that generally you should come down towards the low end. And you can see it here. We pulled back here. We got close, pulled back, etc. all over here. So again, makes kind of sense, even though we opened flat to positive yesterday on JPM, that we would see a big sell-off, and we have come down, and it's even down again today. I will be monitoring, just like I said yesterday. I'm going to be monitoring this 303 level, maybe a 300 even number Pierce, currently trading at 308.55 on JP Morgan. But for day tradable levels, I'll start getting interested on a break of 303, really interested on a break of 300 today, this pivot low, the even number. And so again, as always, folks, in these game plans, I usually give you guys some swing trade ideas, some day trade ideas. These are all things that I'm focusing in on. And here, this is something I will be watching in my live day trading room today with our members to trade. All right. Looking at Wells Fargo again, yeah, it's down a little bit, but in general, for me, I need the bigger moves. If this did fall much, much more, my first technical level of tradable support would be right here. I think we can all see, again, notice all of this resistance. We were hammering on this zone, kept on getting rejected. Price then backed off, got momentum, ripped through. Then if it comes back into this level, we know that former resistance becomes technical support. Key point in technical analysis. So right around 87.25, if we sell off there, which is very possible, then Wells Fargo could become a tradable opportunity. Bank of America down, but same thing, down relatively minor today. The big sell-off, let's see. So again, we're trading right around 53.5. I would have to see the $51 to $50 level here. And again, if we look at that, you can see why I'm choosing that level. You have this pivot low here, right here, down in this range. So anywhere in this vicinity, you'd start to find some good support, maybe even down to that 50 even number Pierce. So really starting around 51 down to 50, this should have some very good technical support for trading purposes. All right, now let's flip over to a few other stocks that are on bigger time frames, right? So, here we've looked at what's going on in earnings. Remember, tomorrow, by the way, Taiwan Semi. And by the way, the futures are down. Part of this is the unease about all this stuff we talked about at the Federal Reserve and inflation because of the commodities. I think, again, the commodity issue is being underestimated here. And I showed you guys yesterday, like cattle prices, which is meat related, right? All these other prices. I mean, we're seeing silver. We'll go over the silver chart in just a minute, but some really big moves here. And I think for the most part, the markets are ignoring that, even though it should have an impact on inflation in the next few months. But I think one of the bigger cruxes today, concerns, is that we're hearing that the decision on tariffs from the Supreme Court could be out as early as later today, or at least by Friday. And the markets are nervous about that, right? I mean, even the president said yesterday it's going to be kind of a mini catastrophe if they essentially strike down his tariffs because of all the inner workings and refunds and this and that and so on and so forth. So let's keep that on our radar as a potential risk for today at any point. Generally, I don't think it'll come out during market hours. I think the Supreme Court's smart enough to release it after hours, but just keep it on your radar as a potential risk. And then Taiwan Semi tomorrow morning, That's going to be huge. First major tech company to report. It's, again, not a U.S. company, but it is a semiconductor AI play. That will be epic for tomorrow's tech trade. No doubt about that. Of course, I'll cover it tomorrow in my trading game plan. All right. Let's go over to some of these stocks. Yesterday, CRM had a big drop, down 7%. Again, a lot of concerns bubbling up about data centers and profitability. What did we hear? We heard the president yesterday starting to go on the attack and saying, hey, listen, and by the way, this is something I've screamed from the rooftop for the last 3 to 6 months. I've said, guys, it's ridiculous that these data centers require so much energy and we don't have the build out yet for these nuclear reactors, et cetera. So they're going to pull from the grid, which is going to make you and me, our electric bills are going to literally double, triple, quadruple if that's allowed. Well, finally, the president's taking action. He's basically saying, hey, listen, they can't do this. That's going to slow down the data center build out. It's also going to mean that these data centers, they're buying all these chips from NVIDIA. If they can't use them for a couple years because they don't have the power, those chips are going to be obsolete. They could, the amount of money that Oracle's invested, we know they borrowed like $100 billion. Are they going to get a return on that? Or is it just going to be debt? Just dead debt. And these are, again, major issues that are starting to bubble up. So CRM fell yesterday. We saw Oracle come down a little bit as well. Not a big drop on Oracle. But again, for me, I will be watching this chart. I think CRM is going much, much lower. I have a really good technical level down here. This will be more of a swing trade, 193 and change. Pivot low right through here. By the way, you can see like a little mini inverse head and shoulders there when it broke out. And then notice how it broke out here. Chopped, broke out, retraced to the scene of the crime, and then was off to the races. That's very common in technical analysis. The so-called coin term that I use is the retrace to the scene of the crime, aka the breakout trend line or breakdown trend line. Microsoft is on my radar here, guys. Microsoft is down again today. Look at it, keeps hammering on this trend line after this drop. This is a very weak bounce. For this double top to drop down, hit, and only get this minor bounce, that's not a good sign. And again, that tells me that Microsoft is on the verge of breaking down and going lower. I think the same thing is going to impact these guys, is that there has been so much. And by the way, this is one of the reasons why I'm bearish on the AI trade overall, is because there's just not enough power in the system or in the US or even in the world to power all the data centers that are in progress. And so that is going to put essentially a bottleneck where these companies are going to be all of a sudden like out a ton of money and unable to monetize it based on, at least partially. Listen, some data centers will get built. They're already being built, but a lot of them are going to be put on hold. And I already reported on this about 2 to 3 months ago that Micron had put one on hold as well. So just something to keep an eye on in terms of that. All right. Couple other things. I want to get into silver today. Incredible. Absolutely incredible on silver. I had this parallel for you guys that I showed you, I believe, on Monday when we were just breaking above this former pivot high right here. And I was like, all right, well, if we break and close above, we probably go to the upper end of the parallel. Did I think we'd get there in 2 days? No, I did not. Incredible momentum, folks, in silver. Now, silver is at the high end of the parallel. So this is going to be a test for the silver bulls. It could easily get through it, but this again will be the level I watch now, right here at $93 per ounce on silver. The one thing that's getting my attention, notice what I have down here. This is a negative divergence, right? So you're starting to see a negative divergence in silver. Here, this is a positive divergence, right? So you were getting the proper signals. What I mean by that is here's the RSI, high, higher high, and higher high, right? So, and that makes sense. The stock, or in this case, the commodity was going up. So the RSI was making higher highs as the chart of silver was making higher highs. What we're now seeing, though, is a negative divergence. And by the way, this is not telling us that today it's the top, right? This is telling us to be on alert for something here. As again, you have a high, higher high, and a low, lower low on the RSI. And so this is the first time we're really seeing that divergence in the price of silver via the RSI. It just does put me on alert, especially with the high end of the parallel channel. Let's go to gold real quick. Gold continues to push up. It did not confirm a breakout yesterday. It closed back on the line, so we have to see where it closes today and then whether or not it'll confirm tomorrow. Like I've said, this would be something where if it's able to really confirm, maybe it can get to 5,000 per ounce before we get a big correction. The only thing, again, is just keep in mind, for the first time in the metals, we're starting to see a negative divergence on gold. Now, again, this is only short term. So if you're like me and you have your long-term holdings, I frankly couldn't care about this. But as a swing trader, this is important for gold. Okay, as a shorter term investor over weeks or, a couple weeks or days or something like that, this is definitely something that I want to pay attention to. Okay, next up, let's look at oil. Oil continues to rock and roll. Again, I was dead on this breakout. Amazing move to the upside. It's now had 2, 4, 5 days up in a row. And again, listen, after 5 days up in a row, honestly, what this should do, what would be healthiest if it starts to go sideways and builds momentum to go up again. I still think it's going higher on oil, but again, 5, 6 days in a row, depending on what we get here, at some point it's going to need a little bit of a break, right? And that's okay. That's healthy. Think about it like you run a marathon or you run, a couple miles. Most of us can't run marathons. I certainly can't at this stage here. But the point being is if you run X distance, you can't just run another X distance without taking a break. You need to stop, refuel, rest, then you can do it again, right? Same thing for charts. That same mentality applies, and it's very cool that it does. It mimics human nature in many, many ways. Again, so let's see where we go. Great move. I still think there's eventually more upside. Maybe we're due for a little consolidation first before that upside. We'll monitor that. Now, this is interesting. We had a break below, didn't confirm on natural gas, small bounces. Now we're seeing another move down. Now we're right back to those previous lows. If we go lower, the big support level is going to be 274 to 275. I'm going to keep that on my radar here, guys, as a major level on the charts. Now, the thing to watch here is this, and this is more of a long-term view on nat gas. When you ask, okay, these data centers are not going to be able to draw from the grid, from the electric grid. How could they potentially power themselves? Natural gas is probably the most likely one. And so while the chart here is very weak and it's had a big move down, if your outlook is, let's say, 3, 6, 9, 12 months, I actually think there might be some positivity here on natural gas from a data center perspective, where, again, listen, all these data centers aren't just going to be put on hold. They're still going to go ahead. Not as many as there were, but they just have to ultimately pay for other energy. And again, that will be a cost they incur. It'll lower their margins, these hyperscalers, but ultimately they still want to build out because it's a race. It's like an arms race in a way, except, for data centers and AI. And they're not going to just say, oh, well, we're just not going to do anything for 2 years or 5 years until these nuclear reactors are built. And so they will go for other sources. That, to me, has me on alert for a longer term play, potentially on nat gas of, let's say, 6 months or longer. In the near term, I'm still monitoring it here. I still think it's due for a bounce, but again, a longer term play is very possible as well. All right, guys, lots to go over. Again, awesome stuff. Watch that S&P, guys. This is everything here. Flipping back to the chart one last time. Keep an eye on this. This is everything to me right here. This is what I'll be monitoring on an intraday basis, a daily basis, and as always, here in the game plan, I'll keep you guys in the loop. You guys have a great rest of your day. Thanks for tuning in. Please share this with friends and family if you think they would enjoy this more data-based show on technical analysis. I'll talk to you soon. Take care.